Hello, everyone, and thank you for joining us today. I'm Rachel Branson, the Professional Development Manager here at NC Realtors, and I'm excited that you can join us for today's webinar. Today, we're going to be talking about the state of the housing market and what that means as you work to grow your business this year. But before we get started, I want to cover just a few housekeeping items with you. First, we will be taking live questions via the chat field at the end of the session today. So be thinking about any questions that you may have for our speakers. We will also be recording today's session and we'll email you a link along with any resources that are discussed during today's session by the end of this week. So now I'd like to take a moment to welcome today's speakers. Today we're joined by Jim Hall, the Single Family Mortgage Lending Manager, and Monica LaCrue, the Affordable Lending Manager, both joining us from Freddie Mac today. Welcome, Jim and Monica, and thank you so much for joining us.
Well, thank you, Rachel. It's always a pleasure to be able to speak with you and your members at NC Realtors, and we hope that the information that we shared today is really beneficial for your members, and we'll get started. My colleague, Monica LaCrue, we'll start off the presentation and then we'll go from there. But thanks again, Rachel.
Wonderful. Thank you both.
Good afternoon, everyone. Thank you so much. I'm just going to do a quick confirmation. Jim, if you want to give me a thumbs up, you can see my screen. Awesome. Great. So thank you so much for joining us. Thank you, Rachel, for having us. I'm Monica LaCrue. I'm Affordable Lending Manager with Freddie Mac. And I work along with Jim, and we educate real estate professionals about our products, services, and tools. We know that you are the trusted advisor, and a lot of buyers reach out to you as their first to work with and making their home purchase. So we're going to highlight kind of the state of the housing market, go over some products and resources that will help you reach your home buyers. So getting started here, we're going to start with a little bit about who Freddie Mac is. Freddie Mac was started by Congress in 1970, and we were created to keep money flowing to mortgage lenders in support of homeownership and rental housing. We operate on what's called the secondary mortgage market, which means we don't lend money directly to consumers. We buy mortgages from our approved lenders, and then we pull those mortgages into securities and sell those securities to investors worldwide. Our mission is to promote liquidity, stability, affordability, and equality in housing. This mission rings true in both good economic times and the bad. We definitely experienced that during the pandemic. And we're really dedicated to stabilizing communities, expanding credit responsibly, and supporting affordable rental housing. We have three main lines of business: single family, multifamily, and the capital markets. So Freddie Mac here, we have an all for home approach, and we focus on four key pillars that support our industry leaders, and that's through our insights, education, mortgage products, and business solutions. Through our insights, we highlight our research studies, thought leadership, speaking opportunities, and data to position our clients and our partners for success. Through education, we offer training and events like the one you're participating in today, and we provide tools and resources to professionals to help them reach more home buyers and get them ready for responsible and sustainable home ownership. We also have our mortgage products. You know, buyers today and in the future are going to have unique needs and require both innovative products and informed advisors like yourselves. I'm going to cover a few of our products today, and they're really designed to help reach and educate to help you get you educated to reach more home buyers. They offer opportunities for first-time home buyers, diverse populations, and low to very low moderate income buyers. Through our business solutions, it takes, a broad set of solutions and people across the housing ecosystem to solve for borrowers and industry challenges. We're leading the way and by providing, groundbreaking kind of innovative solutions to business products. So moving along here, sorry, my screen here is, there you go. Sorry, my screen is a little weird. Okay. So we're going to start by diving into the overview of the current housing market. the market has been heavily affected by the pandemic, and there are also a number of factors. So let's take a look at currently where we are in the housing market. The U.S. economy ended 2021 on firm ground. Economic growth is expected to slower in 2022 as we continue to navigate, during this post-pandemic world. The labor market continues to recover from the effects of the pandemic. The unemployment rate in December of 2021 was at 3.9%. However, the U.S. economy added fewer non-farm payroll jobs in December of 2021 than expected. To date, job openings remain high at 10.6 million. Non-farm payrolls are down 3.6 million from the pre-pandemic levels of February of 2020, showing that there's still an opportunity to improve as it relates to employment. Our economists expect that the pressures on inflation to become more moderate this year, as the Federal Reserve begins to taper its asset purchases and raise interest rates. They're also forecasting an average of 3.6 in 2022 and 3.9 in 2023. The demand for housing continues to remain stable, mainly due to the low interest rates, coupled with more millennial first-time home buyers entering the market. And home sales were strong in 2021, with the fourth quarter home sales expected to come in at 7.1 million. Our economists predict home sales to hit 6.9 million in 2022 and increase to 7 million in 2023. They're also predicting an increase in mortgage rates, which will allow to, again, that moderation to moderate basically the housing demand. And we forecast that home price growth to level out a bit as we go through 2022 into 2023. Moving on, this is a snapshot of the quarterly forecast. This is from January of 2022. And as I mentioned on the previous slide, home purchases we expect that home purchase originations to be 1.2 in 2022 and 2.2 in 2023, with higher mortgage rates forecasted into 2022 and 2023. Our experts are predicting that the refinance activity is going to slow. So that window is definitely closing. So if you have some past clients who still want to take an opportunity, I encourage you to reach out to them. Our experts are also forecasting total originations to decline from a high of 4.7 in 2022, and it's going to taper down to 3.3 in 2022 and 3.1 in 2023. So definitely more of a stabilization in the market compared to the boom that we've been seeing in the past several months. On this slide, we see the homeownership rate by region. Here we're comparing rates to fourth quarter of 2020 to the fourth quarter of 2021. And we see that rates remain steady in all areas. When COVID-19 hit many of the metro areas, a lot of people started to move out and relocate to less populated areas. And that could have been in search for more space or just to kind of get some more elbow room. So they're not, going to the grocery store with a bunch of people. Home ownership is still a really good investment. The low interest rates are keeping agents really busy, and more people are looking to purchase. It's becoming harder to pay for rent when you can own for relatively the same price or less in some markets. So great investment in home ownership. This is also a great time to reach out to your past customers, run a quick market analysis and share their current value on their home. This may be a time for them to consider moving up and leveraging some of that equity that they have, maybe buying a second home, refinancing to a lower monthly mortgage payment to keep more money in their pocket every month. And it might not translate into a direct sell, but if they choose to refinance, obviously it's not going to translate to a direct sell, but they might be, just that touch base might prompt them to think, oh, this is my real estate agent, I need to engage with them. They might, offer a referral or something like that. One of the big things that I want to point out on this slide, in addition to that, is a lot of people are starting to think, oh, when's that bubble coming? What's going to happen? And so what we see here compared to the bust that happened in 2008 is we see that a lot more people have a lot of equity in their home. So if they do are having a financial struggle, selling their home is going to offer them a way out, as opposed to a foreclosure or a short sale, what a lot of people saw in 2008. So it's a great opportunity for people to tap into their home equity if they are reaching into any sort of financial hardship. Here on this slide, we see the migration pattern that we talked about. COVID led to a lot of movement across different states. I know a lot of friends of mine left California in search of more affordable markets. And they were looking for, once a lot of, at least my friends, millennial people were doing remote work, and so they could live from anywhere. And so they decided to move again to those more affordable markets. Some of the top outbound states were New York, New Jersey, Illinois, again, those high cost areas, with some of the inbound being Idaho, South Carolina, or even Oregon. So those states in yellow are the outbound, and those states in blue are the inbound. I see here that North Carolina is a blue state, and I encourage you to reach out to some of the agents in those outbound states to share your listings, new developments, facts about your state, to drive up your referral business. Social media is a great way to engage. I was attending a real estate conference a few weeks ago, and I met an agent who has a Facebook group called Californians Moving to Colorado. He used it to highlight his state, his listings, and it's actually led to a lot of referral business from people leaving California, moving to Colorado. So a great way to reach home buyers that you might not see on a regular basis, using social media to gain their eyeballs there. Now, this slide shows a bit more of those outbound migrations. Many were looking for more space. They were learning from home. They wanted more area. They also didn't want to be around so many people, so they left the urban markets. This trend is something that's going to continue, or it's a trend that I'd like to continue to follow. I was at another event in Chicago last week, and Illinois was one of those outbound states. And it was interesting because some of the agents were starting to share that a lot of those people who had left are starting to return to the market. So it'd be interesting to see if there's other urban areas where they're now seeing those who had retreated come back, as home prices, now that more people are returning back to those urban markets. So it's definitely something to keep in mind. Here on this slide, affordability continues to be another barrier for home ownership. This slide shows that year over year, down payment went up 13%, whereas an average monthly payment increased by 4%. Low interest rates, the desire to own, along with slow home building, has all led to an increase in affordability issues. I know this that you're feeling this in your market, and you're working with many home buyers who are struggling to make sense of these current market conditions. I've spoken to many agents who are having those tough chats with their buyers on budgets and managing their expectations. They might be approved for a certain amount, but they might need to look at homes that are priced a little bit under in order to make up any difference that they need to offer over asking value or market value for those particular homes. So I'm going to pass it along to Jim Hall. He's going to go over some first-time home buyer demographics, and offer some insights onto what current home buyers are looking like and into the future. So Jim, pass it over to you. Just let me know when to advance.
All right, thank you, Monica. Great information, and hello everyone. And you will be getting copies of this presentation. Rachel will be sending it out to everybody tomorrow. So you don't have to jot all this stuff down. And I know it's a lot to view and comprehend, but it is an example of what Freddie Mac brings to the table. Like Monica had mentioned earlier, about our insights and how we're out there promoting home ownership. And Freddie Mac's primarily a secondary marketing company that deals directly with lenders and housing finance agencies. But we do recognize the importance of the realtor world, and that's why people like myself and Monica are out there, raising awareness and educating, on what Freddie Mac does. And we have a tremendous data and analytics team that compiles all this great information for us and allows us to go out and share it with you. So again, it's a pleasure to be with everyone today. And, we've built a great relationship with NC Realtors. And again, thank you, Rachel, for, allowing us this time. So what I wanted to talk about was some challenges to home ownership. And, the information on the screen here, we sourced this from the Urban Institute and also the National Association of Realtors. And, what we see out there and the information that we receive is that access to down payments, remains one of the biggest hurdles out there for borrowers, especially the first-time home buyer. A lot of them just don't know where to go. And, and you're at the genesis of the transaction. So, the more you know, the better you're going to be in guiding, your potential home buyer. And, also, not only knowing where to look at down payment options, the home buyers coming into this market right now are getting hit with so many other hurdles. Housing prices have been going through the roof, 15 to 25% in certain areas, across the country. That makes it less affordable. The big issue, inventory. We're all struggling with that, every state in the union. So it creates a highly competitive market, especially for the lower to moderate income folks. They really are up against it, especially against, if they get into a bidding situation with another potential home buyer that has a lot of cash assets. So there's a lot we have to do right now. And again, we're all in it together. Realtors, lenders, housing counseling agencies, we're all fiduciaries for these first-time home buyers and trade-up home buyers. So the better we can serve them, the better we're going to do. So as you see here, millennials are really driving the market. But again, there's a general lack of knowledge out there. And later in the presentation, my colleague Monica will go over one of the educational tools called Credit Smart that Freddie Mac offers. And it is a fabulous tool to use, and hopefully you'll find out that that it is something that you can put into your toolkit and offer to your potential home buyers. Please advance the slide. Okay, wanted to look at some demographics here. Now, I always find this very interesting. Okay, first-time home buyers made up 34% of all home buyers, and so that is a market where you do see lack of cash assets. So if that's a third of the market, it really would behoove you to know where you can go and point these first-time home buyers in the right directions to be able to attain some down payment assistance. So again, it's critical information to know. Also, the typical first-time home buyer was 33 years old, so that's in the older range for millennials. While the repeat buyers, are at 56 years old, and that kind of makes sense. They're in a downsizing mode, maybe looking at an over 55 community. So so the median age for first-time home buyers is 29. And again, it's really interesting to see, how they obtain information in the marketplace. And also, what type of down payment sources they have, because resources are critical as far as getting an approval through a mortgage company. So 61% of those down payment sources are coming from savings, while we've seen that 28% come from gifts from friends or relatives. Please advance the slide. So again, as I mentioned earlier, 34% of the buyers out there are first-time home buyers. So that really tells you where the market is coming from, and really a high percentage of them are millennials. I mean, there are Gen Xers out there that are still in the first-time home buyer market, but you're going to see the higher percentage of first-time home buyers coming from the millennial generation. And then we have Gen Z following the millennials, so we got to get ready for them also. Please advance a slide. And this is a really interesting comparison of home buying households. As you saw in that pie chart a couple slides, single females are really a rising market, and that's throughout the country. And also, single males are following that also. So, we always looked at home buying traditionally as, mainly couples, but that is really changing, in the new market right now. And surprisingly, you see to the right, buyers 66 to 74 were the age group with the highest share of single females at 22%. So, either their spouse has passed away, or, they've gone through a divorce situation and they want to get into, a situation by themselves to where they have their own home to share with themselves. So, when I saw that, that percentage there, it really raised my eyebrows. So that's, pretty interesting. So again, some really, neat information here that that we have to present to you. The darker color there is married couples. The darker blue, the lighter blue is single female. The gray color is a single male, and kind of like I don't know what you would call that, light green color is unmarried couples, and yellow is others. So you can see how married couples are still at the lead, but the single females are rising rapidly throughout the age ranks with single males. So you get prospective home buyers that are just by themselves. Don't pass them by, because they may have good income, good credit, and qualify. So we'll get them in the homes also. Please advance a slide. Okay, millennials, I love them. Okay, I'm not afraid to say I'm at the end of the baby boomers. I'll be 61 this year, but I have two millennial children. I have a 29-year-old son and a 26-year-old daughter. So I've gotten schooled on how millennials act, what they go through. And if you really want to be at the head of your class, you're going to have to learn, if you haven't already, how to really work with the millennials. And what do I mean by that? And I can speak from personal experience. My 29-year-old son and his fiance, they bought a home last year. And here he is. He has a father who's been 36 years in the lending industry, and I offered him my help and advice. But he wanted to learn everything over the phone. I said, okay, Connor, you go your route, but eventually you're going to have some human interaction with a realtor and a loan originator. So I dug into this deeper, and what I found out, one of our other partners, NAMBA, which is the National Association of Minority Mortgage Bankers Association, they did a survey with millennials, and millennials are gaining their information through really three sources: YouTube, Instagram, and TikTok. And I was amazed that Facebook wasn't on there. But my daughter tells my wife that Facebook is for old people, and and they're not looking at it. So they're getting a lot of their information through YouTube, which was totally astounding to me. But that's the way they like to get their information. And that's, believe it or not, what my son went through. I mean, I recommended to him to use Freddie Mac Credit Smart, which he eventually did use as a tool. But he did it, his first seeking through YouTube. So if you're out there, trying to market yourselves, to this millennial generation, make sure you're utilizing YouTube, you're utilizing Instagram, and you're utilizing TikTok. I mean, that doesn't mean you have to get on TikTok and dance. I know that's a big thing on TikTok, but however you're getting your word out there that you're the realtor of choice for the millennials in your area, that would be highly recommended. And so with that, they eventually have to come to us. They have to come to the humans to get them through this this process. So so eventually you will be there for them, but do the right marketing to really reach this generation. If not, if you're like in my age group, and you're only going to be talking to baby boomers and some Gen Xers, you're going to have a limited market to talk to. So again, the larger market is millennials, and that's 40 years and younger. Please advance the slide. Thank you. Okay. All right. So the purchase market still remains strong, even though the inventory is not there. It makes us all work harder because each loan is much, much more precious. So you have to really be there, for your prospective home buyer, because the competition is so great. And again, going back to my son, I told him, you're going to have to be patient through this process. And I said, you're going to end up going to some open houses where there's a line going in, into the house. And he did. And I said, your heart's going to be broken probably, more than once. And he did lose out on a couple properties. So again, patience is the key. How you counsel, the prospective home buyer is critical. Sales is wants and needs. You have to identify the prospective home buyer's wants, and really it's up to us to meet their needs. Sometimes they only qualify for, a certain, amount of money, and they can't get everything that they want. And again, that's for us to be diplomatic with them, especially in the first-time home buyer situation, to get them into that starter home where, that extra bedroom, may not be appropriate for them right now to have, because, they just don't have the money to sustain the mortgage. So again, it's looking at demographics and really, really, really analyzing them and being able to present the best plan for your prospective home buyer. And again, Freddie Mac here, as I mentioned earlier, is to provide the, these insights and education for you. And we have innovative mortgage products also in business solutions. And if with North Carolina Housing Finance Agency, they are doing a great job with their down payment assistance program, helping first-time home buyers in your state attain home ownership. And there's many great lenders that have affiliated with that housing finance agency to provide the program that Freddie Mac puts out there called HFA Advantage. So if you need more information on that, always contact Rachel, myself, or Monica, and we can get you that information. Please advance the slide. And I want to talk about mortgage readiness. Okay. Now, this is critical that we don't waste anybody's time. So, and I'm not trying to turn realtors into underwriters, but it is really, really important that that your prospective home buyer can qualify for a mortgage. So if you're not requiring them to have a pre-qualification from a mortgage company, it might be a good idea to put that into your regimen. If you don't, it's a good idea to know if your prospective home buyer is mortgage ready. And we have some criteria here that you can take a look at that will help you as a guide. So how do we define mortgage ready? Okay, it's usually a credit score of over 660, a debt to income ratio of less than or equal to 25%, no foreclosures or bankruptcies in the last 7 years, and no severe delinquencies in the last 12 months. And these are questions that you can ask your prospective home buyer if they don't have a pre-qual. And and if they if they meet that criteria, then it could be a go for you. You may have someone that can qualify for a mortgage. Then we have near mortgage ready, okay, and that's with credit scores between 600 and 661. Now, FHA mortgages are very expensive for home buyers because there's an upfront mortgage insurance premium, and the mortgage insurance is perpetual. It stays on for the life of the loan, but it is an alternative to conventional lending, which Freddie Mac is conventional loans. Because of the lower credit scores, there's a higher risk. So they may be near mortgage ready if the credit score is below 660. Not mortgage ready, that's credit scores below 600, and the other criteria stands with that also. The debt to income ratio can be over 25. So again, this is food for thought for you. You'll get a copy of this, and if you ever have any questions down the line, please let us know. But it's always very important, to have a lending partner that can also help you through this also. Please advance. So this is a really good illustration for you. To really shows you how many people are mortgage ready and near mortgage ready by generations. So the overall population, a little bit over 41 million individuals are mortgage ready, and 13.3 million are near mortgage ready. Now, I don't want to overlook the near mortgage ready population because that's a lot of people. And again, it's up to us, in the industry, realtors, housing counselors, lenders, secondary marketing companies like Freddie Mac, to educate and raise awareness, for these individuals so they can, get into the mortgage ready avenue. And again, I can't stress education is the key. And again, Monica will be going over our Credit Smart program, which would be a great tool for you to present to someone that you have that is near mortgage ready and they don't qualify right now, but they could qualify within the next 12 to 18 months. So again, we broke out the Gen Z, young millennials, old millennials, and Gen X is here. And you can see, by the the categories that we broke down: not currently mortgage ready, near mortgage ready, and mortgage owner. And again, millennials are the bulk of the market right now. And you can see under young millennials, mortgage ready, and older millennials, 31%. So they're strong numbers. And, and so the near mortgage ready in the millennials is 12% for the young millennials and 10% for the older millennials. So we, again, through education, we want to get them into mortgage ready. And obviously the ones who are not currently mortgage ready, we want them to, get educated also and get out of that category and head into the mortgage ready category. Please advance. Okay, and then, one thing we've learned that a higher share of mortgage ready younger millennials have student loan debt compared to other generations. But, what we've learned out there that the student loan debt, isn't, a major, crippler of loan decisions. I mean, it's out there, it's a debt, but there was a myth out there that it was, destroying all millennials and none of them were ever going to be able to be mortgage ready. And, through our analytics and, and our demographics and just, doing surveys, we've learned that that's not the case. So, of course, you're going to run into, some individuals that have, excessive student loans, and unfortunately, they won't qualify. But again, don't make that an impediment to you, showing homes to, to some millennials that, do have student loan debt. If you, again, if they can get a pre-qualification from the loan originators you work with, you'll know if they'll be able to qualify or not. And please advance. Okay, and another interesting thing is how long it takes for people to save for their down payments. And there's a myth out there, again, that I've run into all over the country, is that people believe that on our conventional loans, Freddie Mac loans, that we require 20% down, which is not the case. Okay, our affordable programs, HFA Advantage and Home Possible, which lenders are using, all over the country, only require 3% down. So, so that's very important to know. So, older millennials and Gen Xers need an average of less than 3 years to save for that 3% down. And also, if you use a housing finance agency like North Carolina Housing, they have down payment assistance programs that will even, help the people out to where, they don't have to, be stressed out in savings. Okay, please advance. And it's a very interesting heat map here. And we're looking at areas that are, mortgage ready, okay? And you can see that, in the color-coded areas that, in North Carolina, you have a lot of areas where you have the green dots there, okay? That means there's above 75% of people are mortgage ready in those areas. And then in the, the light pink, I guess you would call that, you can see those areas have, 500,000 to 1 million people in those areas. So they really define, some hot spots for you. One thing we do find out nationally, that coastal cities have the highest share of mortgage ready, but again, affordability is threatened in those areas. We know a lot of areas, on water are very, very expensive. I live up here in New Jersey. Our shoreline in New Jersey is, not affordable for a first-time home buyer. Also, on the Delaware River, which is the river that separates New Jersey from Pennsylvania, our river towns, a lot of those areas aren't affordable. So, so again, it's just, it's food for thought, interesting information, and I hope you find it interesting and useful. Please advance. Okay, and then now in the not currently mortgage ready area, again, like I said, we don't want to ignore them. We want to help these people to become, mortgage ready. And as we find out that people that are not currently mortgage ready, we call it a thin file, and it's about 14% of the population, and they have no severe delinquencies, debt to income ratio less than 25, but they have no credit score. So this is where we have to take this opportunity as a teaching tool to to really help them out. Get them on the road to home ownership. They have to establish credit. They can get a credit card and start using that, intelligently, to where they're not going to put themselves in jeopardy, but where they can start making monthly payments, to build up that credit profile. So so again, we have to get out there and whether it's through YouTube or Instagram or TikTok, and reach these people, to get them, either out of a renting situation or out of mom and dad's basement, to where they can come to a realtor like you, for advice to find that, that first property, to get them on the path of, home ownership and gaining equity and gaining wealth, through home ownership. And please advance. And at this point, I'm going to turn it back over to my my colleague, Monica. And like I said, hopefully you found that information very useful. Rachel will be sending this out to you, tomorrow. So you'll have this information at your fingertips. And Monica, it's all yours.
Absolutely. You've covered a lot of information. Very, very insightful. I know that a lot of, first-time home buyers, millennial home buyers, diverse communities are facing a lot of different challenges. And so now I'm going to cover a few products that we have here at Freddie Mac that are solutions for some of the challenges that home buyers are facing in today's market. I do want to remind you that there is time for Q&A after the session here. So if you have any questions of anything that we have covered, I encourage you to drop them into the chat. There will be time for us after the event to answer any questions you guys might have. So moving on, let's talk about those affordable products. Knowing that down payment, Jim covered it, was an obstacle for first-time home buyers. Freddie Mac has a few products that offers low down payment options, and it gives people, again, a faster path to home ownership. We have 3 products that we want to highlight today. The first is Home Possible. It's intended for first-time home buyers and repeat home buyers who meet income eligibility requirements. You can put as little as 3% down and use flexible sources for those down payment and closing cost funds. In order to qualify, like I said, there is some income eligibility requirements. To qualify, you need to make less than 80% of the area median income. We do have a tool online that you can use to find out what the area median income limit is in your market. It's also by property. So if you have a listing who you want to see if maybe a buyer might qualify for Home Possible, it's a free tool that you can use as well. If you want to use Home Possible, the home that they want to purchase can contain anywhere between 1 to 4 units. Manufactured homes are eligible, but there are some restrictions. Mortgage insurance is required when the down payment is less than 20%. However, unlike FHA, the mortgage insurance can be removed once the buyer has 20% equity in the home. And so basically, without having to refinance, they can actually remove that mortgage insurance. Home Possible also allows for non-occupied co-borrower, and the homeowners can own other properties. Our second product is Home One. This is also available for as low as 3% down. It doesn't have any income restrictions like Home Possible does. And buyers who use Home One do need to be first-time home buyers, and they do need to take home buyer education. Jim made some references to Credit Smart, and I'm going to go over our resources in a little bit. But Home One is great for those millennial home buyers who like to live in high cost markets, who have those low, don't have a lot for down payment assistance or need, down payment assistance. And so Home One is a great product for those first time millennial home buyers. And our last product that we want to highlight is our HFA Advantage. It's offered through our state and local housing finance agencies. Range of federal and affordable housing and community development programs. HFA Advantage has Home Possible at its core, but it does have some differences. A few you can see here on the slide. It's only for a 1-unit property, and all the borrowers must occupy the home. And unfortunately, a manufactured housing is not eligible. We don't lend money directly. If you would like a referral for a lender, please let us know. We're happy to put you in contact with them. Jim can definitely reach out to those who can offer HFA Advantage. And so we want to make sure that, again, these are products that can be offered through our lending partners. We don't lend directly, but these are what we have. They're called different things through lending partners. But again, low down payment options available for buyers who need some assistance to make Home Possible in a shorter period of time, not saving for that 20% down. Okay, let's go to the next slide here. We also know that we talked about it, affordability is an issue, and we see a lot of aged housing stock all across the country. And so here at Freddie Mac, we've created some additional products as solutions for some of those aging homes. We introduced choice renovation a few years ago, and it's a solution again for those aged housing stock that we see. It's designed for buyers looking for a convenient and cost-saving way to finance their home purchase and renovation costs in a single closing transaction. We also know that location is very important for diverse home buyers. And so if you find a property in an area that somebody really likes, the location, and they just need, the home needs a little bit of TLC, this is a great product for them to upgrade it, to make it the home of their dreams in the area that they choose to live. We also know that reducing home cost utilities is a great way for families to have a better financial situation. And it helps preserve home affordability over time. And so we introduced our Green Choice Mortgage. And basically what it is energy efficiency home products and home improvements that will lead to savings on their heating bills and their cooling bills. So again, if you'd like some more information about these products, I encourage you to reach out to your lending partners to see if it's something that they offer. And if not, we can definitely make a recommendation of a lender to reach out to get additional information. So to wrap up here, again, we're coming to the close of our presentation. I'm going to cover those Freddie Mac resources and tools that you can use to stay engaged. They're designed to both help you as a professional and your home buyers. So the first is MyHome. MyHome is a consumer-facing website that provides answers to common questions related to home ownership. Their website has infographics, quizzes that your buyers can use to gain knowledge about the home buying process. The site is not branded, so it's a great pressure-free place for your buyers to explore. It's a great tool for you to use after an open house when following up with those who attended. Send it over to them, and again, they can kind of view at their own pace without ads. Post it on your social media page. Remind your followers that you are the go-to when it comes time to buying a home. The website also has information for consumers looking to rent, refinance, or sell. So great resource there. Jim mentioned it a few times, our Credit Smart. Credit Smart is actually one of my favorite tools here at Freddie Mac. I look at it in three buckets. The first is the financial education, our Credit Smart Essentials. It turned 20 last year, so it got a little bit of a facelift. So it's new, it's Credit Smart Essentials. And it's really designed to gain, for consumers to gain financial independence, financial knowledge. It has budget worksheets. It covers saving for college, saving for retirement. Is renting or owning better for you? It does walk them through how to buy a home and what's to be expected. And it also covers like auto loans. What sort of information should consumers be mindful of as they make their financial choices? The next bucket is Credit Smart Home Buyer U. For buyers who are trying to use Home One or just a first-time home buyer in general, they do need financial education. And so we have Credit Smart Home Buyer U. It offers, this is more detailed on the home buying process. It takes about 3 hours. It's free, it's self-paced, it's available online. You can actually use your iPhone to take it. So it's very user-friendly and mobile-friendly. It satisfies that home buyer education requirement. So as soon as the home buyer finishes it, it actually can go straight to their lender or you as a real estate professional ready in their file for closing. A great tool. And the last one is Coach. It used to be Credit Smart Train the Trainer. It's Credit Smart Coach now that also got a revamp. And it's basically where you as a real estate professional can become certified to teach Credit Smart in your community. It's available 4 times a year. I encourage you to sign up to get our newsletter, and I'll show you how to do that towards the end of the presentation. That way you can get certified. So if you're hosting first-time homebuyer fairs, or you're going to your local community center to host first-time homebuyer education, it's great for you to become certified to help consumers get financially ready to purchase. This is our Affordable Lending Insights page. Here is where we have articles, we have executive perspectives, ebooks. We also share our upcoming webinars. And we feature basically Freddie Mac subject matter experts and our thought leaders who influence the industry. The articles can be shared from our website directly to your social media pages. So it's a great way for you to show your followers that you are an expert in the industry and that you're, someone who's staying up to date with news and information. So I encourage you to bookmark this page and share it with your followers. And our last is our Real Estate Professionals Resource Center. Again, we can't lend directly to you. We're really here to be your partner to make home possible for your buyers. Sign up for our newsletter. You'll get those Credit Smart information. You'll stay up to date with what's going on, the events that we have coming up. You actually get to decide what type of news we share with you. So when you go there, FreddieMac.com/real estate pros, you'll go down there at the bottom. There's a little box that says sign up. You enter your email address, answer a couple of questions, and then you'll start to get our Freddie Mac newsletter. So great resource for you guys to get more news and information. So that concludes our presentation. Again, I want to thank you guys so much for participating. We do have a few more minutes to answer those questions if you have them in the chat. Again, we will make this presentation available for you so you guys can go to those websites and those resources and bookmark them to start using them with your current home buyers. So I'm going to invite, yes, Rachel back and Jim back on. I'm going to stop sharing my screen and let's take a look at those questions.
Thank you so much, Monica and Jim. What incredible information, and just so much going on right now within the housing industry. This was just a phenomenal recap, and even to see where potential clients are coming from, where they're going to, just a lot of really great information covered today.
You're very welcome, Rachel. It was our pleasure. So I did see something pop up. Someone asked if we're going to share the slides, and as we had mentioned that Rachel will be emailing them out to everyone.
Absolutely. It looks like the chat field is getting hit with quite a few questions. So I'm going to go ahead and start diving into some of these real quickly. So the first question that we have is from Kimberly, and she said that she was once certified as a housing counselor through HUD as a real estate agent. Do you all know if you have to be employed at a housing agency in order to become a HUD certified counselor? And I know that's HUD and not necessarily Freddie Mac, but do you all happen to know the answer for that?
Unfortunately, I do not know the answer to that, but we do have a housing outreach team who does work with a lot of HUD counseling agencies. And so we could definitely take that off and reach out to them to see if they have knowledge of it. Again, like to your point, it's definitely HUD as opposed to what's under our umbrella. But I encourage you to become a Credit Smart coach because that's education that we provide. You can become certified through Freddie Mac, and you can provide education that way if you choose to.
Wonderful, thank you. Jill wants to know, what does revolving trades mean on the how many of the mortgage ready are in debt slide?
Okay,
Revolving trades
trades. Yes, I'm sorry.
Yeah, it's revolving credit, to where like you have a credit card and you charge something and they give you a revolving minimum payment to make each month. So your Visa, MasterCard, department store credit cards or whatever, they will be revolving trades.
Perfect, thank you. Christy wants to know, out of the products that we talked about today, are there any that are specifically more beneficial for military-friendly lending than others?
That's a great question. So I come from a military family. My dad was in the Marine Corps for 20 years. My older sister just retired from the Army. And my little sister is her husband's in the Air Force. And so unfortunately, it's hard to compete with a VA loan, 0 down. So I know that usually our veteran community looks to utilize their benefits of being a service member. And so, but at the same time, what we have seen, we do have a partnership with VA Rep, which is the Veterans Association of Real Estate Professionals. And, we do see that some sellers aren't looking at VA loans as a favorable, just because it's no money down and whatnot. So I'm encourage them if they qualify for a conventional product like Home Possible or Home One, for them to utilize those options as well. Usually if they're putting money down, if they're not putting money down, any savings that they have can be used for home repayments or getting ready for home ownership, because, obviously once you buy your home, you're going to want to, furnish it and all of those kind of things. So that's a tough one. I definitely think every individual is different, and in partnership with your lending partner to kind of find the best product for them. But we've definitely seen veterans and those service members utilizing conventional loans as well. So I don't, Jim, if you want to add anything to that as well.
No, you covered it. I mean, veterans, should take advantage of the benefits of serving the country. And but again, working with your loan originator is a fiduciary for you. They should be presenting the most affordable loan product available. So, and not all lenders do VA lending. So, so you have to be very, very cognizant of that. If you do want to use your VA benefit, that you're going to have to align yourself, with a lender that does that type of lending.
Perfect. All right, next question. Amy would like to know if you could spend a moment just speaking a little more on the shared equity program.
Oh, yes. That, and unfortunately, I'm not an expert in that yet, but I can definitely share a resource page. Let me pull that up really quickly. I don't know, Jim, if you know any information, but while you do
Yeah,
that,
while you're doing that, shared equity programs, there's community land trusts, and what the community land trust does, they have certain properties to where they'll retain the ownership of the land, and the home buyer comes in and is actually buying the house. So and it's done to control and make it affordable also. So it's done in certain areas, and there's a land lease involved that the home buyer would have to pay for the land. I really don't know if it's prevalent in North Carolina. You would have to educate me on that. I don't know if you know, Rachel, are there a lot of community land trusts in your area, or?
I haven't seen or heard of very many. I know of some very specific examples outside of North Carolina, but I don't think that's as commonly practiced here as it is in some other states.
Right. I know it's very popular in Florida. There are community land trusts up in Massachusetts. The city of Baltimore has a bunch of properties that are on, 99-year, ground rent leases and things like that. But if you do find a community land trust, in North Carolina, we do have a specific department that really are the subject matter experts on that program, that we can get your members in touch with, to where we can make that connection for you.
Wonderful, thank you. Katie has a question. She would like to know, as far as first-time home buyers goes, what if a once married homeowner who is now single wants to buy a home? Are they considered now a first-time home buyer?
Okay.
I'm sorry. So we had a couple who was married. They are now no longer married. One of the individuals within that relationship is now purchasing a home on their own. Are they able to be considered as a first-time home buyer?
Okay, but they owned a home when they were married.
It sounds like it, yes.
I think it really depend on whether or not if they were still the homeowner on that home with what happened in the divorce, they got the home or not, right?
Yeah, I mean, if this person hasn't owned a home in the last 3 years, they would be considered a first-time home buyer.
Yes, the last 3 years. So if you haven't owned a home in the last 3 years, you're considered a first-time home buyer, regardless of if you're married or not.
Yeah.
So I think it really depended on whether or not what happened to the house after the divorce,
Right.
who owned it. Yeah.
Right, right. So the answer is, you know, if the divorce is over 3 years, they would be considered a first-time home buyer. If the divorce was last year and the person left the marital home, then they wouldn't be a first-time home buyer.
Exactly.
Perfect. Thank you. I think that's what they meant.
Yeah.
And also with, you know, if you want to run through North Carolina housing, you know, they do have their own guidelines. And, you know, Freddie Mac has underwriting guidelines, but we will defer, you know, if you're going with the HFA Advantage through North Carolina housing to their guidelines also. So, you know, so if you have the realtors out there in the audience, if you have a relationship with lenders who are doing NCA HFA business, you know, please check with them on what their guidelines are also.
Wonderful. Thank you. Daniel has asked if you could just repeat, what was the training program that real estate agents can get certified to teach prospective home buyers? What was that called?
That was
ahead,
Credit
Monica.
Smart. Credit
Okay.
Smart. So yeah, that's Credit Smart. So again, it's 3 buckets. Credit Smart Essentials, where consumers can take it free online at their own pace. Credit Smart Homebuyer U, which is homebuyer education. So if you wanted to use a low down payment product or a product that requires homebuyer education, that's Credit Smart Homebuyer U. And then Credit Smart Coach is where the professional can become certified to teach Credit Smart in the community. And so if you just go to, I think it's either FreddieMac.com/Credit Smart or CreditSmart.com, Credit Smart Freddie Mac Doc. Let me try to find the link on our homepage. But if you just Google Freddie Mac and Credit Smart, you should be able to get there. And again, it's identified in 3 buckets. Credit Smart Essentials is also available in multiple languages. There's also a military component to that as well, because obviously we know that you know, somebody mentioned VA and whatnot. So working with military home buyers have their own nuances as well. And so there's actually a module dedicated to them too. So great resource. Just Google Freddie Mac and Credit Smart. And if not, you'll get the link in the presentation.
Wonderful. Thank you. Susan has a great question. She said, or has asked, is housing assistance an option for a first-time home buyer who has a 20% down payment ready, or do they have to have a smaller down payment?
Again, that would be, it sounds like they're getting down payment assistance through North Carolina housing with this question. Is that where this is going?
It actually seems like they may have cashed. So 20% down cash, would they still qualify for housing, one of the housing assistance options?
That depends on the organization who is providing the assistance.
Okay.
Okay.
Okay. Perfect.
Because I do know that some housing finance agencies have an asset ratio test to where if someone has a lot of cash assets, they can't qualify for the down payment assistance. So again, they would have to check with whoever's providing the assistance.
Wonderful. Thank you both so much. So that was actually our last question that we had in the chat. Great feedback from everyone. We can't tell you, oh, hold on. Someone just said I missed a question. Bear with me one moment. Let's see. Susan, can you clarify which question you were hoping to have answered? About interest rates. All right, hold on one moment, please.
I see that. Yeah. So our economists give us quarterly predictions, and so since we are at the end of March going into April, a lot of the predictions we're discussing today were those that had happened in January, end of December. And so if you visit our website, just FreddieMac.com, we have a whole research page. We do quarterly projections. And so obviously the market, especially with everything going on post-pandemic, the war in Iraq, Ukraine, there's a lot of different factors that are driving interest rates and stuff like that. And so it is something that does fluctuate often. And so to get the latest and greatest, going to FreddieMac.com is the best way to do that. But our predictions were based on those from late last year, early this year. And so, of course, the market has changed, and it will continue to change as we move on. So.
Yeah, yeah. And if I can add, I mean, interest rates, they're fluid and they're going up, and we all see that. But right now, out in the market, there's sticker shock. And people were used to rates in the 2s and the 3s and the 4s, and now if they're going to go into the 5s and 6s, again, people are going to be hesitant. But I've been in this market a long time. The people will pay what the market bears, and once they get over that sticker shock, a rate in the 5s and 6s isn't bad. When I got into the market in 1986, I was selling rates of 12, 13, and 14%. And that's what the market bared, and people, or bore, I should say, and people still bought houses. So, so realtors out there in the audience, yes, rates are going up, but there's still going to be people qualifying and buying homes. And again, they're going to have to pay what the market bears.
Absolutely. Well, thank you both again so very much. I do want to just reiterate real quickly that I'll be sending an email out tomorrow, again, with a copy of the recording of today's session, along with all of the resources that we discussed, a copy of the presentation slides with all of the direct links to the programs for your clients. So keep your eyes open for that. And Monica and Jim, just thank you both so much for taking time to be here with us today. We sincerely appreciate our partnership with Freddie Mac, and look forward to the next time that we get to connect with you all.
Well, you're very welcome,
everyone.
Rachel. Yeah, thank you for inviting us back, and we look forward to our next presentation. So
Wonderful.
bye, everyone. Thank you.
Have a great afternoon. Thanks, everyone.